It's about that time of day again. My name is Joseph. It's Wednesday evening, August 16th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro tonight. Crude is bearish after this morning's inventory report, but we're trading at two major support levels, telling us the most reliable selling opportunities will likely be up at resistance levels waiting overhead tomorrow. The S&P is range bound with a bull bias, telling us to focus on buying opportunities below the range tomorrow, preferably down in the battle zone. The Nasdaq is range bound and stuck right in the middle, which tells us to stay patient, avoid that middle, and look for seller failures below the range or a possible elusive fake out, breakout, pullback pattern up to new highs on Thursday. And of course, gold is bullish with an overshoot of a channel, telling us to watch for the pendulum swing to correct back to the opposite side for buying opportunities tomorrow. And of course, the euro is bullish with a strong move higher, so strong we know we don't want to chase the move higher, so looking for a two-legged pullback and a target going back up to retest yesterday's high. Got a great newsletter in store for you guys and gals tonight. We got a bunch of big news tomorrow, got a bunch of big moves from today's session, and that's certain to set up for a bunch of big opportunities on Thursday's session. Before we jump in, though, and take a look at these charts, I do want to remind you the only place to watch the full-length version of this video is on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link and come join me here on the blog at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when the nightly newsletter goes live. Follow me on social, lower left-hand corner, StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite flavor. Follow me on social media throughout the week for important charts, links, and updates. And don't forget to grab those charts tonight. You guys always tell me how much you appreciate this aspect of our nightly newsletter, so don't forget you can always download all the charts from tonight's video and have them ready on your computer right for tomorrow's session. And please don't forget to grab that free pass in the upper right-hand corner. You know, you're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can guarantee you that. Come join me in the trade room as a guest. Grab that free pass in the upper right-hand corner, and I'll see you there as a guest this week. Guys and gals, big opportunities setting up for tomorrow. Before we jump into charts, though, let's make sure we know what the schedule looks like for Thursday morning. Tomorrow's Thursday, August the 17th. We're cruising our way through this third week of the month of August. We don't have much to worry about in the overnight session. We got a little bit of merchandise trade, a little bit of labor force survey right between 7:50 and 9 o'clock Eastern time tonight. I don't expect that to be much of a mover over the overnight session. We then roll forward to tomorrow's London session. Opening bell around 3 a.m. Eastern time in London. We're going to hit the retail sales from our good friends in Great Britain. And for all you London session traders out there, you can look for those ECB meeting minutes to give you a nice, good volatile push right into the U.S. session tomorrow morning. So retail sales from Great Britain and, of course, the ECB meeting minutes, right? Sure to stir the pot a little bit tomorrow as we finish up the London session. If you guys are with me tomorrow morning in the trade room, we open up at 8 o'clock Eastern time, and we've got a whole potpourri of events happening here 8:30 and 9:15 tomorrow morning. It's a Thursday, so of course we're expecting those very typical jobless claims every Thursday morning, and we have the Philly Fed right to go on top of that tomorrow, 8:30 a.m. Eastern time. We then jump down to 9:15 for the industrial production report at 9:15, so we are sure to get a nice shot in the arm tomorrow morning, nice and early before 10 a.m. right for the U.S. session. Don't forget, we're going to be in the trade room tomorrow morning, 8 o'clock Eastern time with all of our advanced members. What are you waiting for? You don't need to do this alone. Come out and join me as an advanced member, and I'll see you guys tomorrow morning in the trade room. Let's jump right in. We got a lot to cover here tonight. Hope you guys had a great Wednesday session. We have crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on the euro. Kicking it off here tonight with the crude oil futures, the black gold, the Texas tea. Crude is bearish with a strong move lower to finish today's session. But we're trading at the triple down support and the low of this bear channel, both of which tell us to expect some profit taking from the bears and the most reliable selling opportunities up at the high of that channel as well as up above the high of that channel in the battle zone tomorrow. The challenge will be if price keeps pushing lower. We have the prior month open and the quadruple down support levels just a few points lower. So our plan is to avoid chasing this move lower, focus on traps and failures of above that moving average, right, to make sure we sell high tomorrow. Guys, look at the chart here tonight. The first thing I want to remind you is we are going into the rollover time of the month. Crude oil, of course, is nice and easy. Crude rolls over around the 18th of every month. Tomorrow, of course, being the 17th. So just keep an eye on the rollover, right? Keep an eye on the volume. As of right now, we have considerably more volume on the 917 than the 1017. But once you see more total volume coming into the 1017, that's your cue. It's time to switch to the 1017 contract. So, of course, this is the 917 contract this evening. We'll probably be on the 917 tomorrow, but keep an eye on that rollover tomorrow morning, or what's most likely on Friday or possibly next Monday. Just a heads up on that. As you can see, this morning we pretty much started off instead of a range-bound market. We spent the morning this morning in our trade room looking for buying opportunities off the low, looking for selling opportunities off the high, and of course we had that big news came out at 10:30 a.m. Eastern time, and the party heads south. Very, very strong two-legged move down. We're now, of course, at the low of this bear channel. And of course, we are off that high, right? 2-3 legs down off that high. So we're sitting here at some pretty good support down here, right? And we don't want to chase this move lower because just below us, we have the prior month open, and below that, we have the quadruple down. Remember, anytime a market goes 4 legs, that's usually about as far as it's going to go. If you draw the 4 legs correctly, that is, I should say, right? Then we usually find a bottom there. So really the long-term target here for the bears tomorrow is that 46.23. We may also see this market with a significant pullback, and it may give us a larger measured move to work with later on this week as well. Bottom line, we do know is we're sitting right at a level of support, multiple levels of support. So we really like to get the price up off this low, preferably inside the battle zone, find some prior swings, mark up that battle zone. We'd love to be able to sell off of that battle zone and bring this sucker back down to retest that low. If price goes lower here without pulling back, our focus will be looking for traps, looking for opportunities here to avoid selling low, but still participating in that move as it goes lower. So talking about some of these opportunities here, the most aggressive opportunity will be right off the high of that channel. You'll notice there is a small swing at 95 that will give you the opportunity here for a short-term and relatively aggressive trap high. Then, of course, we have what is a lot more preferable, which would be a failure pattern. Moving average, buyers try to buy the pullback, failure pattern into pullback back down. Those are always some of our favorites there. Failure, right, then into pullback. So that's a great opportunity for tomorrow. Up inside that battle zone, look for the failure above the moving average. We may see a little bit more, though. We may see a little bit more here. In other words, we may see it really run, and we may be able to use a trend line, right? In other words, what I call a two-legged pullback, one-legged and two-legged pullback for a move back down to retest that low. Bottom line is sellers don't want to sell low. They want to sell high. We'll look for selling high up at levels of resistance. What if price goes lower? What's our plan if price goes lower tomorrow? If the price goes lower, again, we don't want to sell down here. We want to make sure we sell as high as possible. What we're looking for is we're looking for opportunities to sell, but think of it above the moving average, right? So sell as we go up above that moving average. That will be the key on the way down to that prior month open and that quadruple down target tomorrow. Anytime a market has moved this far without a real good correction, we know that eventually they'll run out of sellers and they'll have to go higher to attract more bears into the market. So we don't want to chase this thing as it goes lower tomorrow. Last but not least, how do we turn bullish? 3 things: strength, pullback, strength. I have no problem being a bull tomorrow, and we may come in tomorrow morning at 8 o'clock Eastern time in our trade room, and we could easily be a bull market. Let's not forget the day started off inside of a range, and this is all really based on, right, the inventory report that came out this morning at 10:30 a.m. So with that said, if we do see that strength, pull back to the moving average, right, and strength going higher, again, I have no problem being a buyer. If we do see those bulls take control, keep an eye out, right, for a new bull channel. With that new bull channel, you focus on buying those dips. You focus on buying those dips, right, and the target is to go back up and retest that high just shy of that $48 a barrel. Bears have control, sell high even if the market keeps pushing lower, and don't forget, right, keep an eye out for the reversal, but always wait for proof, right? Always wait for proof before we go trying to call those reversals. Let's keep rolling here. About some S&P. S&P is range bound with a bull bias, telling us to look for buying opportunities below the low of the range using failure patterns and the 2-try rule tomorrow. The battle zone will be the ideal place for buying opportunities tomorrow, knowing that it'll be challenging to find a successful breakout pullback to new highs with that measured move just a few points overhead. You know, we've seen this the last couple days here on the Emini. Real strong move higher here, and we've really done a good job at holding this, 2462 to 2460 area. You can see we got that high, got back to retest that high. We talked about that in last night's newsletter, and the most important thing is you can see the clear rejection off that high, right? Anytime we have a strong move up, we expect to see that two-legged pullback, right, and that retest of that high. This is one of the cornerstones of a trading strategy that we use here at School of Trade. So once we get back to that high, though, then we want to see what happens next, right? Do we explode through the high? We call it acceptance. Or do we see rejection? Do we see profit taking? Do the buyers become sellers, basically, at those highs? You can clearly see this one, right? The buyers became sellers, and we pulled back down to the low of that range. Now, to be very, very honest with you, we don't usually see a market just bounce cleanly off of that range, right? Usually what happens is it'll run lower, try to break out, right? The momentum off the high will carry it lower, and that's where we want to be looking for those buying opportunities tomorrow. So basically, to kind of summarize it all, it's a bull bias into a trading range. I want to buy low, I want to sell high, and this is where it's important to remember, when I say sell high in a bull market, what I really mean is I want to take profit on my long positions, right? You can try to fade that high if you want. Just keep in mind, right, it's a bull market, so it's going to be a lot lower reliability. So how do we buy low in these situations? Well, in a trending market, you can buy any dip you want, right? But in a range-bound market, we like to look for what we call the 2-try rule. Here's a really good example back here, right? Pull back once, try it again, and once we see that second attempt now is going higher, right? Once we see that second attempt to go lower starts failing, that's when we know we have the green light to be buying off of that low. So for example, we've got once, right, twice, looking for that chance here now to break down. Once we see that breakdown, right, we can then look for those buying opportunities going back up to retest the high. So down, 1 try, 2 try. I'd really love to dig into this battle zone. We haven't really been able to pull back to that naked reversal line we talked about earlier this week. If you recall, the battle zone was a little bit lower earlier on this week, but because the buyers just simply have had a very healthy appetite, right, buying each dip, we have to assume now these buyers, right, are going to be more accepting of higher prices right now as we settle in to this 66, 67 area here, and as we sit right in the middle. I want to avoid the middle, right? Stay away from that middle. Focus on buying that low, 1 try, 2 try, right? Buying that low back up. The hard part's going to be if price goes higher. If price goes higher, we have obviously the high of day today, kind of the high of the week so far, right up there at that 74 even. We have a measured move overhead. You'll see another example of this in the Nasdaq in a moment. As we try to go higher, you'll notice we keep getting smacked back down. So really what you want to see is, and again, this is where the sellers can get a little bit aggressive with this, 1 try, 2 try. You're more than welcome if you got some risk tolerance, if you like to live on the edge a little bit, right? As a seller, you're more than welcome to try to fade that move. You can see, right, the 1 try, 2 try was successful, right, as a sell off the high earlier in today's session. Again, right, just be aware though, right, take some profit quickly, hold on to that runner as best you can, but you really want to be careful to fade the high, right, in a bull market. What will be a lot more reliable though will be something like this, a strong move up, big strong move up. Make sure we get that measured move, right? Literally get to the measured move. Whenever we get to a measured move, we always then expect to see a two-legged pullback and a retest of the high, right? So two-legged pullback back, right, and then retest the high from there. The key is going to be get the moving average above the top of that range, and make sure you're buying above the top of that range. I call that the fake out, breakout, pullback. And of course, that will get us through the top of that range. Again, most important thing about this is you want to see a lot of strength, right? Notice how we saw the breakout earlier. Notice how the moving average never cleared outside that range, right? That's going to be the big deal for tomorrow. We saw a great example of that earlier this week on the Nasdaq. So again, buy low, be careful buying high, make sure you get some real strength up through that high, and of course, we can try to go forward from there up to that prior month high. We have to assume the prior month high is the ultimate objective here, right, for those buyers. That will be your runner target tomorrow, right, that prior month high. Another big day setting up for tomorrow. Tomorrow, of course, being a Thursday session. We get some major news tomorrow morning early. Don't forget those ECB meeting minutes tomorrow morning if you're in the London session. And don't forget to come out and join me tomorrow in our trade room at 8 o'clock Eastern Time. If you're not a member here at School of Trade, I always want to remind you, join our free trial to learn more about the trading strategies we use here at School of Trade. If you're watching the video right now on our YouTube channel, there's a link in the description of that YouTube video. Follow that link in the description and come over here to the website at School of Trade and learn more about our free trial, learn more about our beginner, intermediate, and advanced levels membership. And don't forget, I'm always here to help. If you have any questions, hit me up on live support 24/7, 365. I look forward to answering your questions and get you started as a brand new client. Guys and gals, be back tomorrow morning, 8 o'clock Eastern Time. If I don't see you then, I'll see you same time, same place tomorrow night on the newsletter. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos.